Welcome to Capital Review Group's Research Tax Credit presentation. This presentation will provide you with an overview of the Research and Development, or R&D tax credit, and explain how architecture, engineering, and manufacturing companies can use it to minimize their tax burdens. While this incentive saves major corporations billions of dollars each year, it remains underutilized by many smaller businesses, even though they routinely conduct activities that would qualify for the credit. Slide 2. About the Research and Tax Credit. This credit was created in 1981, and the incentive was designed to encourage the development of new and improved products, processes, and software here in the United States. However, in order for an activity to be qualified for the credit, the activity must meet a specific four-part test. The first part of the test is known as the permitted purpose test. Under this test, the purpose or intention of the activity must be to create or improve a product, process, or software. Under the second prong, the activity must be technical in nature. In other words, it must rely upon the principles of engineering, biology, physics, or computer sciences. In other words, the hard sciences. The third part of the test is known as the uncertainty portion of the test. In other words, there must be some type of uncertainty regarding the capability, the method, design, process, or cost. What's important is that it's not necessarily that you're creating a new product that's never existed before, but it has to be something new to your company. And that's a very important factor which we will discuss later. Finally, there must be a process of experimentation. And under that, the idea is it has to be a process that's designed to eliminate uncertainties. Examples of qualifying processes include trial and error, testing or evaluating alternatives, and more. As mentioned earlier, with the repeal of the discovery test under the R&D regulations in 2003, various activities now conducted by architecture and engineering firms now will meet the four-part test. Slide 3. Scope of qualified activities and costs. Qualified research and expenses for the R&D credit start from the conception of the idea and end just prior to commercial production. In other words, businesses can incur qualified research expenses, otherwise commonly referred to as QREs, from the beginning of the time the idea for a project is conceived through the initial design stage, prototype, and development, testing, manufacturing, process development, testing and trial runs, and ending just prior to commercial production. These qualified research expenses include wages as well as expenses paid for supplies used in the conduct of the qualified research and other costs involved in supervising and supporting activities. It's also important to note that certain payments to independent contractors or outside providers may also qualify for the credit and be considered a QRE. Slide 4. Qualifying activities for architecture firms. How does this credit apply to architecture and engineering firms? Well, in the day-to-day course of their businesses, engineering and architecture firms often perform activities that qualify for the R&D credit. Some of these examples include identifying issues related to functionality, reliability, quality, and performance. At the beginning of a project, there are most likely uncertainties about the best ways to go about achieving the goals of the project, such as determining the optimal design for a building, identifying these issues, and beginning to formulate a plan for resolving them. These may all count as qualified research. In addition, architectural designs that accommodate client requirements, municipal codes, particularly those relating to the building's structure and energy uses, site conditions, and climate. Also incorporating new design or construction techniques, performing engineering calculations, evaluating, testing designs through modeling, computational analysis, and other means. Finally, performing construction planning may also be a qualified activity. Slide 5. Qualifying activities for manufacturing companies. Manufacturing companies may also find that they routinely engage in qualified research activities. Examples include developing new products, developing second generation or improved products, developing and testing prototypes, improving the manufacturing process, such as making it more efficient. It would also include creating a manufacturing process specifically for the development of new products. Finally, changing an existing manufacturing process in order to comply with regulatory requirements may also qualify. Slide 6, methods for capturing R&D credits. There are two methods for capturing QREs for purposes of calculating the R&D credit. At Capital Review Group, we use the project accounting method, which is the preferred method by the IRS. There are multiple ways to account for the cost of a project under this method. We use timesheets, we conduct interviews, we review financial information detailing the amount spent in the course of the project as we determine the potential credit. We do not recommend the other method known as the hybrid method, since it is often attacked by the IRS and other state taxing authorities and sometimes may result in disallowance of the credit. Slide 7. We'd like to share with you a case study of an architectural firm that we work with to claim the R&D credit. Using the project accounting method, we examined 3 years of projects of various size and scope, conducted interviews, reviewed materials, and other information from the client. Our analysis revealed the client was eligible for over $163,000 of federal credits during this period. It is important to note that if a business does not use the R&D credit in a year it is earned, the credit may be carried forward up to 20 years. There are also some carryback provisions. This allows businesses to claim tax savings when they need it. Finally, starting in 2016, based on some recent changes in late 2015 to the R&D credit, the R&D credit now may reduce the AMT for certain small businesses. Small businesses in this case are generally businesses with $50 million or less in gross receipts. In addition, for certain small startup companies, the credit may be used against certain payroll taxes as opposed to against income taxes. This would allow small companies that don't pay tax or aren't paying tax during the time period to actually use this credit. Here's another case study, engineering construction. We worked with an engineering and construction firm that was a leading designer and builder of process systems and facilities. Over several years, we conducted an analysis of the federal and state credit opportunities and examined the firm's design and engineering activities, product technology, architecture, and construction activities. As a result, we concluded that the firm was entitled to an 8-figure claim based on the federal and state research tax credits. Upon review, the IRS accepted over 95% of this claim, resulting in tremendous tax savings for our client. Slide 9. Here's another example. We worked with a small manufacturing company that had approximately $7 million of revenue a year. The client, after our review, was able to receive $140,000 of R&D tax credits a year. This amount was evenly divided between federal and state credits. It's important to note that many states offer R&D credits that are very similar to the federal credits and that they will add to and possibly double the total amount of tax savings for a company. Slide 10, information needed to do an initial analysis. As we work with clients, we aim to make the process as simple as possible. Therefore, we ask for certain information up front to assist us in determining the credit amount and whether the project is feasible. The things we generally ask for will be some payroll reports, trial balances, federal and state tax returns, a project list of projects worked on in the last 4 years, a project cost summary for the projects on the list, and a fixed asset addition. This will allow us to give you a good faith estimate of what we believe the credit may be for your company. Slide 11. What we do with this information. Once you provide us all the necessary information to do a preliminary analysis, we will analyze and determine if a research study makes sense. If it does, we will present you with a good faith estimate of the potential tax benefits and an estimate of the cost to prepare the study. We will then initiate a discussion with the client and ask their CPA firm to review our estimates and answer any questions the client may have. If the client is interested in proceeding, we present an agreement to conduct the study and ask them to sign it. Upon receiving the signed agreement, we proceed with our investigation to determine the potential credit amount. One of our first steps that we take is to conduct interviews with the team leaders to collect more detailed information about the projects. We then review and analyze the findings and prepare a report, which is reviewed by the client and the CPA firm. Finally, we will assist the CPA firm and the client to claim the tax credits on the respective tax returns, either federal and state, as well as amended returns. Generally, if we receive the information in a timely manner, we can complete the entire study within a 4 to 6 week time period, perhaps even faster depending on timing. Finally, it's important to note that at CRG, we view this process as a collaborative approach between the client, the CPA, and CRG. We make our best efforts to keep the client apprised of the status of the project, as well as the CPA, to ensure the credits and the report is completed in a timely fashion. This concludes CRG's overview of the Research and Development Tax Credit. I'm Gary Amico, and I appreciate the time you spent reviewing this document. For more detailed information, please see our presentation addressing the frequently asked questions about the credit, or contact us at 602-741-7776. Thank you and have a great day.